Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mixed markets around the world today, mostly tailwinds as China has a strong session and Europe is also seeing some green arrows. Do you think these trends can last?
I think that's the magic question. Everyone's like, how much further can we go? And Asia's been crushed for multiple months, and Europe was also crushed for multiple months. So we are on now multiple weeks of a rally. And if you look at the chart of the FXI, which is an ETF for China, you'll see that here's when all the selling started, pretty much almost a year ago. This was last April, May, and June when we lost most of the moving averages. So you look at the bottoming zone here. Recently, we've come off it, and we now have this new little ascending channel that I think, as long as it stays above this, try and stick with the trend. It does feel like most places around the world are trying to get up to the 200-day. So if China gets to the 200-day, here you have 3670. So from 28 to 37, still well off those highs from about a year ago. And then if you look at Europe, which is up small this morning, I think the DAX is up 0.5%. You've had a nice move off these lows. We talked about can you get traction when it clears this intermediate area? Well, it did, and now it's flagging again, not falling apart above the 8-day moving average. And if this wants to get to the 200-day, the 200-day is right there around 26. So, nice lower pivot area that was cleared, and now we've been trending above the 8-day. There is the 200-day. That's your next big significant resistance in the EWG, which corresponds to the DAX, which is usually the strongest sector in Europe.
U.S. markets closed on a high on Friday, making it its fifth week, with a lot of sectors taking back the 200-day. S&P is basically flat. What levels do you predict here?
Well, we're going to watch to see if we can continue. Like we just talked about overseas trying to get to the 200-day. We're leading them because most of our sectors are above the 200-day.
Right.
And I talk about moving averages a lot. A year ago, markets were below the 200-day. You had some of the 8-day, 21, 50 days curving lower. That was a sign of weakness. So during this 5-week rally that we've just had, the question is, can we get through significant resistance? And that is the 200-day. And we did get through it. And now we held above it for like a week. So that's giving a little bit of confidence to the bulls, because sometimes okay, you can push above the 200-day and then fail real quickly and it's a trap. Well, anyway, as of now, it does not look like a trap, and it looks as if the trend is just continuing. So if you go here with the SPX, you will see, I try and go over this pattern and just show you because patterns repeat themselves. Here's your double bottom. This was your first move into resistance. And then right from around here, when it reclaimed the 8 and 21-day, this is when this new trend started. Showed a lot more than just a short covering rally. So anyway, here's your move up that's been holding the 8-day ever since. Pushed above the 200-day, held it. So at this point, you can't get too bearish as long as the SPX stays above 2012. And if you trade for momentum, here's where your 8-day is. So we are a little bit extended from the 8-day, and it does seem like we pull back to it each time. Like from here, we pulled back to it. From here, pulled back to it. So I don't know if you chase strength this week, but I would write down 2052. Maybe you get some kind of red dog reversal around this where they push it through, make a tail, go sideways, let the 8-day catch up again, because now your next points of reference, which you have here, come in at 2000. What is that? 81, and then really your next one is all the way north of 2100. So all you have here is your resistance pivot, the 8-day, some points of reference, and a very strong trend that's definitely gone a lot further than some would have thought.
The Dow Jones has been very strong, and it lasted above the 200-day last week. What are some levels here?
A lot of people say the Dow Jones isn't a great proxy for the overall markets because it's only 30 stocks, but it's still good to know because a lot of people at home have these big name companies in their portfolio. So when the Dow Jones takes back its 200-day like the S&P did, some people at home start reading their little statements like, oh, wow, my stocks are doing okay. I'm glad I didn't get scared and sell in the hole, or I'm glad I maybe bought that dip. But anyway, the diamonds, which is also another ETF that we look at and trade, very extended. But just to show you how, look at the 200-day moving average here. It got to it, hovered, and then continued. So now, Dow 18,000, I'm sure you'll start hearing it in the media, but at this point also, the 8-day moving average has been the trend ever since reclaiming it here around 162. So I would just be a little bit careful as, again, anytime you're up 4 days extended from it, you're prone to some kind of pullback. So if you want to write down the resistance pivot, if we get a red dog reversal, that's 175.95. We push above, put a little bit of a tail in, maybe get a cute short and let the 8-day catch up. If you're uncomfortable being long into, the crazy move that we just seen, then just do less. But overall, above the 200-day is showing you a healthier tape versus when it broke below and you had that big move down.
To keep the rally going, our lagger sectors are playing catch up, and you had two nice buyable setups in small caps. Do you think they could reach the 200-day as well?
Well, now the laggard sectors are trying to do that, and that's what's
Right.
keeping the rally going, because you can't just have two sectors supporting a market, so you need other sectors to participate. And we did have, two nice buyable patterns in the Russell with the IWMs, so we'll see if they can get to the 200-day, which the S&P and the Dow are already above. So you look here at the IWM, I put this chart on Twitter a few times where this is when it got really interesting, right? You had your first feisty move off the lows, and then it held that 99, and then pow, went up for like 7 days, got a little extended, and then you gotta love nice patterns, because all of a sudden you had another consolidation here where it flagged, and then a lot of guys caught the nice long on Thursday, and then it extended Friday, and now here is that 200-day moving average, Chelsea, you're talking about. So this is your next significant spot. So here's your pattern. That's been a nice move. You want to take a little snapshot of that. And now in order for it to get to the 200-day, one, I'd like to see it hold, just say this 109 spot or a little bit lower. And then if it were to get above Friday's high of 109.95, then the 200-day starts to move lower, and now that's at 112.31.
Banks helped fuel Friday's move as JP Morgan announced additional buybacks. How did the financials look to you?
A lot of traders probably started shorting the financials when the Fed came out with dovish statements. But again, as rallies go, people are like, what do I buy?
Yeah.
And when JP Morgan comes out and says they're going to add to their buyback, some shorts probably got squeezed, that got trapped after Fed Day. And they have some nice patterns there. So let's look at JP Morgan. JP Morgan, it hasn't run away yet, but again, the fundamentals of the banks, everyone's debating on what's going on there. For me, I'm just going to look at the pattern here, okay? This was, this island bottom, okay? That was the low, gapped up, and it held it. Here was another nice pivot buy in JP Morgan, and then it flagged, went sideways, and now you have another move above it. So if you're long JP Morgan, you could have a stop in at 59.66, okay? And if it's going to get a little stronger, it's going to take this out, which is 60.97, and then all of a sudden, here's your 200-day, right around 61.88. So if JP Morgan wants to lead the banks, it'll take out this prior high, and there's your 200-day. If you want to take a quick look at a few others, you have Goldman Sachs, playing a little bit of catch-up. It was pretty strong on Friday. It cleared this, small little wedge type pattern, and now your next spot to get above would be here. If this can get above, what is that, like 158-ish, the 200-day isn't for a long, spot. So, and if you actually look here, look how weak this has been. So this is all Goldman Sachs has done. So it hasn't had a rip-roaring rally, but if the market stays sort of strong, this can play a little bit of a catch-up move. So be careful just trying to short it. Morgan Stanley, how does that look? It too, decent, tight pattern here. This almost looks a little bit like an inverse head and shoulders pattern where you have the left shoulder, the head, the right shoulder. And if this were to get above, I'll just say 2650 with some kind of force, there is room to the upside. So, if the banks get some more room to the upside, it's going to be hard for them, or the bears, just to press to the downside.
Yeah.
So, I would say there's maybe a little bit more room in these banks, just tradable, versus pivots that, gave us levels on Friday.
And now high beta tech, it didn't act so special towards the end of the week last week. Do you see any compelling setups there today?
Well, when the markets continue and your old leaders don't act well, you have to be a little bit more careful. We've seen this before. So today coming in, was it a rest while money rotated, or was it a precursor of a big down move? So far the futures are, flattish and up a little bit. So everyone who said that we're going to have the exact opposite of expiration day Monday, we shall see. The question is now, okay, Google. Let's go through, these three. Google had a big move, right, from, holding this 707 level, getting through resistance here, and then you had a small red dog reversal on Thursday, and not really much downside follow through Friday. So let's take a closer look here so you can see it. All right, Google, has been a leader. So at this point, I would say the 8-day is down at 748, and this prior low here is 751. So I'd say as long as Google holds 748 to 751, this trend in Google should continue to provide leadership. So, but at break and close below this, you better be careful, because if you look at Amazon, Amazon's not acting special at all. Amazon is actually below. Amazon actually was one of the companies that didn't have the great numbers. Here was your breakout failure, your gap down that never got filled. Decent move up, and then I remember that one day last week when all of a sudden everyone was selling after hours when they lost their cloud computing business, from Apple. Anyway, we've had 3 down days, so we'll see if it leads to much more. You have a pivot low here at 546.09. It's been down from 582, so I wouldn't just press here, but see if it creates a bear flag. If Amazon can't get back above 562 and stays below, then maybe this will be some fuel for the bears if it were to break below it and lose the 200-day. And lastly, Netflix. It tried to go. Remember, I put this little pivot in here. I said if it can get above this 99.75, it could go, or if it went below here, you'd want to short it. Well, it triggered a little bit to the upside, but not the same kind of power we used to see when Netflix used to go. So here is some resistance, moving across. So I would say if you're still in Netflix, perhaps put your stop in right around 100, and if it holds 100 and wants to get a little powerful and test some of the moving averages above it, it's going to have to get through 102.41 for that to happen, and that would give you $3. So it's something to perhaps watch.
Tesla has been on a tear to the upside, and it got upgraded today. Do you think the analysis is a little late here?
I think analysts usually are late. Where were they 100 points ago?
Exactly.
So it's going to cause like another squeeze. And for those that shorted based on Citron's report, you had some ways to get out. And then on Friday, Tesla took back the 200-day, and now it's up another 4. So to me, I was thinking maybe we get a cute short in Tesla soon. But thank goodness I haven't been fighting it or doing it. It's been above the 8-day moving average. Right here is when Citron came out with the report, and you had a spot to adjust. You had one down day. I remember being in the morning call, and I'm like, if it gets above this 188, I don't care what Citron tells you. The chart's saying that 8 days support. And now this is where, remember that one day where it kind of fell to the 200-day and gave you, one type of pullback? Well, look where it is now. So, I guess we got to look at a bigger chart here to see where some of the old levels are. Here's a spot going across. Okay, that is a little bit closer to 243. So and this pivot high here is what, 234. So right down 234.48. Perhaps on this upgrade they squeezed the last amount of shorts out. Puts in a pivot high, and if you want to trade against a 30 to 60 minute high, try it. Comes off, gets below this, and maybe you have a rest. It's very extended from the 8 days. So one thing I will say is do not buy this gap open unless you're doing it for 3 or 5 minutes. Do not chase it up here. It's way too dangerous. But again, you have to have a planned short, because it's actually hard to borrow. So that means everyone's shorted, and all they're doing is fighting a move that could have made them a lot of money long.
Today is Apple event day, where they'll be refreshing several of their products. How does Apple usually respond to this event day?
Well, let me ask you a quick question.
Any.
Do you have an Apple product?
I do.
Which
iPhone.
Which one?
5. I have an old version.
So are you ready for a new iPhone?
I am. I would like one.
Okay, so what would you want to see from a new iPhone that yours doesn't have right now?
More storage. More storage. Okay. I'm always getting notifications that my storage has run out.
And would you want a bigger one or a smaller one?
Bigger. I mean, I don't have the 6, so I still have the tiny 5. So a little larger might be nice.
Okay, so we'll see if a new product refresh is enough for people to be motivated and getting new ones. I know I have the 6, and I don't know why they're going smaller. I think the bigger iPhones is what was in demand last time, but I guess they're just trying to do something. But anyway, they do try and sell the event, so we'll see if they can. Usually Apple has a big move into it, and if you remember, I put the chart up of Apple when it was like 101.50 and I was long, and then we had the Morgan upgrade, and I was like, wow, good little setup. And now the question is, can Apple grind to the 200-day, which it hasn't been above in a long time? So it's basically down a little bit this morning. So what you want to do maybe is draw your line right here if you're in it. if Apple were to get a harsh close below the 8-day, that means that they were able to sell this event, and this little trend from breaking above 98 could be somewhat over. If they can't sell it below this, and it starts taking out this 106.50, then your next level is 108.30, and then the 200 days all the way up here at 110. And just remember, tomorrow I think there's some news about their case also. So it gets a little crazy around the Apple event because the algos go wild, and you know what we don't want to be? We don't want to be, what did I call us?
Beta.
Algo bait.
Algo bait.
Yes, we do not want to be algo bait, so try not to be overtrading Apple when the news comes out around 1 o'clock. It usually goes for about an hour, and you'll see how it reacts. People want to see if there's a new watch, the way the iPad, the new version there. So anyway, you have your support, you have your resistance. Usually something bigger happens towards the last hour, and then I'll be on the radio trying to help everyone navigate that. But that'll be also interesting to see what the market does. Maybe they'll use Apple as an excuse to take profits in technology or whatnot. So it might have a little bit more focus today because of the rally we've seen in the overall indices versus in the past.
So 2 names from your 2016 report have already met their target, WYNN and FCX, and
Yes.
you listed on your note today that one might be ready. Can you let us know what that might be?
Well, all right, I'll let you guys in on it, even if you didn't buy the 2016 report, because WYNN we listed at 72. It went to the target of the mid-90s. Also listed FCX. Remember I said trash for treasures trade, something that could double. Well, it doubled, and it already doubled, and it's only March. And WYNN we had here, the reason why I had it on the report was because Steve bought 1 million shares. Stock has come in from 200, so at this lower level, I think there's a good risk reward. So anyway, from 72 to 95, that was a nice trade for some of you guys who bought the report. 3 up days now, I would say for WYNN, let it digest, see if it could hold this gap up here. I would not be chasing it. I said that on Friday. But the new one I put in there is Square. Okay, Square is a new issue. Sometimes new issues get a decent move. It already had earnings. This was the first time it looked like it was going to go, and it was a fake out. And then it obviously traded below this range and then hit its low around $8. Since then, came up, and it's basically trying to put in a nice little pen in here. I don't know if it needs another quarter or whatever, but if this starts to get above this 1265 with some kind of force, perhaps it makes its way back up to the post-IPO high. I don't know if everyone on the street loves Dorsey the way Twitter's gone or this and that, but ultimately this pattern looks better, and people do love the product. So we'll see what happens if it can clear 265, and it's got room to the post-IPO highs. Maybe be long a little, and if you have some risk, put your stop in at $11.
Do you have any other notables for us the beginning day of the new week?
Let's see, what did I forget? You know what? I forgot Facebook. Facebook is something I'm actually going to focus on a little bit today. Facebook, just like some other high beta names, took a little rest on Thursday, Friday. So we'll see if Facebook could hold this 110. I think if Facebook holds this 110, it could create a nice little bull flag type setup for additional gains back towards highs, which would be good overall to see for the market. So maybe take a little snapshot of that. So here's your 8-day. If it holds 110, maybe buy a little bit versus that, and then if it can go through 112.50, you add to it. Some of you guys have been looking at the metals. Very sloppy up here. The GLD, you would have thought after this, actually not really. You would have thought after this big wide range bar, you'd have a little bit more follow through the resistance, but you didn't see it. It's down a little bit this morning. So I'd say if it holds this 119, that would show some upper commitment to this whole upper range and keep some of the momentum tight. If it breaks 119, I would be, take a little bit of care here because it could work its way back to the 21-day, which has been support. Some of you guys are looking at the TLT. The TLTs have had a pretty big series of lower highs, high, lower, high, lower, high, lower, high. Here's major support, so see what happens here. If the TLTs start to break out here, that would mean that perhaps the bank rally wouldn't last, and some people start to and maybe the overall market sells off a little bit. But overall, it does look like actually it's getting tight. So watch to see what bonds do here. You have your support, and for it to break this trend, it's going to have to get above this with some kind of authority, and that resistance is 129.51. And I guess in closing, you know, we are on now week 6 of this move, Chelsea, that a lot of guys sold early and some started shorting early, and it's created this pain trade, which, you know, it's unfortunate when it happens, because when markets are streaky for multiple weeks, you remember when you bought it in the middle of the range and you wish you would have just went on vacation and still had the stock that you purchased a few weeks ago. And then on the other side of it, some guys start revenging that trade and start getting short thinking the market owes them short because they sold it too early long. But anyway, the market doesn't owe anyone anything. We went over levels and pivots, and for this 6-week, you know, trend to change, you know, a lot of things are going to have to happen. You know, you have to break the 8-day. You're going to have to see some leadership falter, and we should be able to see that. Besides, you know, everyone just coming out there saying this isn't going to end well. Saying this isn't going to end well isn't a strategy.
Right.
You have to have a process.
Yep, you do.
And that's that.
And yeah, well, thank you for giving us some insight, and everyone have a great trading day.